Well, it's always an enjoyable time to come and meet with the commissioners, and the staff, and people like that. So go over the most exciting thing documented in the county is audit report, isn't it? Okay, won't go that far. Well, you know.
Not a bad day. No, he is right. It is the most interesting document in the county. It just makes me feel that about.
Yeah, well, what we'll do is, we won't hit every page, but I'll hit some highlights for you, and if you see something in there that you want to discuss, then let's stop and discuss that, so. Let's go to the independent auditors report. It's just after the table of contents. And I really like the way the standards have come and put the opinion right at the first of the letter. It used to be 3/4 of the way through the audit report to find out what my opinion was on your financial statements, which it's presented fairly in all material respects. So it's a good opinion on your financial statements. Let's go to page 1 and 2. And we'll just hit a few of the highlights here. This is your statement of net position. This shows all your short-term assets, long-term assets, and short-term liabilities, long-term liabilities of the county. So you can see on page 1 there, your capital assets. It has your buildings and infrastructure and equipment, things like that on here, less your accumulated depreciation. And then on page 2, I'll just point out a few of the numbers for you. You've got down under due in more than 1 year, the landfill post-closure costs, 7.490. And we were able to get the engineering study on that, on your landfill, to come up with he came up with 2 different methods of how to evaluate that solid waste, the landfill. And when we get back to the notes, then we'll look at that a little bit.
Ask you a question before we go.
Sure.
17 million in construction in progress.
Yes,
What would that be?
that is.
Before they did.
Oh,
And
okay.
also
I thought that
and
would be
also
under
the
the
jail.
infrastructure in progress or in process. No, that's a different thing.
No, yeah, it's the
Okay,
construction.
okay. It's 45th. Okay,
Yeah,
And the jail.
okay. Oh, in the jail. Well, jail.
and that's why I have Thane here, is because he knows all the answers.
About jails.
He knows about jails.
Thank you. Seemed like a big number.
Oh, yeah, yeah, very, very good question, though. And then under, on page 2, the net pension liability, the 29 million there, that's your share of the retirement system in Idaho that we have to pick up there, so.
So is that liability we've already paid or something where,
No, that's if everything would go out and everybody started drawing, that's what would be paid out of the Percy system.
yeah, so it's not, I mean, and the Percy, we've already done our portion to Percy, right? So
Right,
this 29 million comes out of the Percy pot, not out of the county pot.
yes,
Okay,
but they, with the standard that came out, they said every entity that participates has to put that liability on their books. So, yeah. They don't let you put the assets on your on the books, but they give you the liabilities.
As of the end of 2023, they were 88% funded. So really, it's everybody making up that extra 12%. Is what that liability is.
Okay,
So the income portion of it.
5 and 6, this is your balance sheet. This is on what we call a short-term assets, short-term liability. It doesn't have your fixed assets, or anything like that on there. 8, right? So 5 and 6 is the bigger there. You'll notice down under fund balance, we've got road and bridge improvements, 20 million, and capital projects, 2 million. Those are set aside that you've put for road projects, the 20 million. And then the 2 million is 1.7 is for the election system equipment and hardware. And then 300,000 for the upgrades, so. And then under justice fund, you'll see 3.2 million as that's for the remodeling and jail expansion, things like that, so.
Yeah. They've spent 800,000 on the land purchase instead of radios. And they still have the 1.18, but it's only gonna come in at 8 or 900,000. If you need to go, what to still.
Yeah. On the other governmental funds, the detail is found on pages 48 to 53 and page 60 and 62, and we'll hit those a little bit later, just we won't hit them, but you can see what the various funds that are in that column, if we lump those all together. Then if we go to page 8 and 9, then we have the statement of revenues, expenditures, and changes in fund balance, or if you're familiar, profit or loss statement there. And as you can see, under the other financing sources, uses, we've got transfers out of 12 million on the current expense, and then it went into the road fund and justice fund. And then we have some under the other governmental funds, which the detail is found on pages 54 to 59 and 61 and 63 there. And you'll see under capital outlay, about halfway up, the total is almost 20 million that you spent for capital outlay and improvements, equipment, things like that. So it's 19,829. You see that, Penny?
Yeah.
On there, so just point out a few of those to you. Then if you go to page 10, this is a reconciling statement. And a couple of things I'll point out is it down there, that first kind of paragraph, it shows what you spent for capital outlays and then what the depreciation amount is. And what this statement does, it takes the fund level and it reconciles it back to the government wide, that first one we looked at there. If you go to page 11, this is a statement of fiduciary net position. It shows your private purpose trust funds, and the detail is found on 64 to 66. And then your custodial funds, that's the taxing districts where you just collect the taxes and then remit it to them. And that's the cash and the receivables that were in there. And then you have your accounts payable or your warrants payable that you were ready to pay out. And then what is due to the taxing districts there. And then page 12 is just a income statement for the private purpose trust funds and the custodial funds, which are the taxing districts. The detail of the private purpose trust funds are 67 to 69. And if we go to page 13, this is where the note for the financial statement start. And the notes are found on pages 13 to 33. And we won't hit every page, but we'll hit a few of the highlights here. So if we go to page 21 and 22, is the cash and investments. This will peak Greg's interest there. But what we do is we show, what your cash you have there, what it's invested in on page 22. And what the fair market value is. And maybe, we've suggested this in the past that, and since you're kind of new, Craig, is we have to report it at fair market value. And so, maybe once a year or once a quarter or something, you can adjust that up or down, to record the unrealized gains or losses on that, so.
I should do that. Okay.
Yeah, at least at year end,
Yeah.
So it can give everyone a truer picture of really how much your cash you have in there, so. And then if you sold everything out, then that's what you'd get out of the cash, so. Page 24. Note number 3, your capital asset shows you the additions and then the deletions of that. Shows you that construction in progress there. Byron shows you, what was added and then what was taken out. And then the ending balance there. That's
Now it's the depreciation.
pardon.
Taken out is the depreciation on the project.
The depreciation is found.
7 million.
The 7 million would have been, there was, the election buildings that was complete, and a couple other smaller projects.
So you take it out of the construction in progress and put it into the building. Yeah, that's what that is. But the depreciation is down, less accumulated
Right.
depreciation. That shows what the total depreciation was for the year, so. Let's go to. Go to page 31. This is note number 8. This is the closure and post-closure care costs. And it shows that 7.49 is what your liability is. And shows, what you have open and just that we really appreciate the engineer and coming up with the numbers to put in the financial statements, because I'm not an engineer, I don't know, but we rely on them to come up with these numbers and appreciate their help there. And when you have those studies done and things like that, then it gives us some number that we can hang our hat on, so.
Well, it's good we get something out of that really expensive thing.
Well, yeah, it helps
Somebody
out.
likes it, that's good.
Yeah, so, was there something else I was gonna?
Your pay as you go on that, on the landfill, so as you have closure costs, the county is paying them. So what this liability really represents is the amount that's in the future of the largest open area that will be open at one time. Which isn't right now, but
Which is the new cell. Because
it will be parts of,
closing number 3.
right, it will be parts of 4, 5, and 6 when they're all open at the same time. And that, according to the engineers, and that's the liability to close that section.
All right, on page 32, the interfund transfers, this shows, where the money came from and then where it went in. To what other funds when you transferred that money there. Note number 14. I'll just point out there are no funds with deficit balances at the end of the year. You've had some in the past, but you've cleaned those up and we appreciate that, so. Get you out of the red on those fund balances, so.
I thought it was supposed to go all around.
Oh. Yeah. All right, let's go to pages 36, 37. This is your budget to actual. Oh, but let's go back to 34 and 35, sorry. I missed one there. This shows the current expense, shows your budget and then how you came out. When I look at these budget to actual, I take the final budget and then I compare it to the budgetary basis just to see if you've gone over, violating Idaho code, but none of what we call major funds were that way.
There.
Yeah.
Budgetary basis.
And you won't let us do that.
Total amount that could be.
No, the budgetary basis is actual amounts that you spent.
And before we've done any accounting adjustments.
Yeah. Yeah. So, current expense is under, and then on the road fund, you'll notice that the original and final are different on that. And that's because you amended it to spend some money there, so. So it went from 11 up to 23. Then pages 38, 39, that's the justice fund. And that one was not amended during the year. And then the justice fund was under, so. Normally, when you look at the justice fund, it's usually, very tight or it's over some of the time, so kudos to the sheriff for keeping it under there, so. The landfill is on 4041, the budget actual there. And the budget was not amended on that one, and it wasn't over. And then on 42, 43, ARPA, this was amended to include that, the 12 million, so you could spend out your ARPA funds there, so. A good thing there, so. Let's go to some of the detail. Well, pages 45, 46, 47. This is because we're including that liability for the Percy, shows some trends that for the last 9 years or 8 years. And then when this statement is complete, we'll have 10 years worth of information. And then the old year will drop off and we'll add the new year. So you'll have 10 years of information on the Percy. Shows the first one there on page 45 shows your share of the net pension liability. And then 46 shows the employer contribution on that. Okay.
If everything shut off, everybody just go and collect it, like you said, the counties be on the hook for this amount.
Yes. As of
As
September
of,
30th.
yeah, September 30th, yes, it would.
So the legislature takes it, state invested, if they make no choices. We still pay our share, but then we have to make up for the losses.
Yeah,
Okay.
you will notice though that Idaho, the Percy account is very conservative. And the reason that they did what they did was so you could pick up Bonneville County's financial statements and then somewhere back east and compare.
Reason I look at that is, they were 100% funded, now they're 83. And it's basically,
Yeah, yeah,
that was before the big raise and contributions this year.
yeah. Yeah, let's see, it's been a few years before they did raise it. I mean, how many,
They raised it this year.
They did last year and they did this year,
yeah, but before that,
Prior to that, it was.
quite a while.
yeah, it's quite a while.
years. And they threatened to do the same thing and then didn't because the market adjusted and they didn't have to.
Yeah,
This time, I think they probably could have. Let the market adjust and not have raised it, but
yeah. So,
Elon Musk certainly made a bunch in the market. I suppose he probably should have.
well, he's got a corner on the market, doesn't
Thought he had the ceiling.
he? Oh, okay.
Yeah.
Let's go to page 62. This shows the debt service fund, and this shows the LID number 7 that was paid off. It shows a balance of about 85,000 in there. And have you done anything with that, Ron, or is it just still in there?
Off the top of my head, I don't remember. I would have to go look.
Okay,
I remember we paid off the mosquito abatement fund, the loan,
17. Yeah.
the 17,000.
oh, so you did that in 24 then?
You know,
Okay,
this one, I thought we had, I'd have to go look.
Yeah, let's just say she just texted, it's like.
I don't really know.
yeah, okay.
Hey,
All right, let's go to pages 70 through 89. And this is this kind of the printout that you get, shows your budget actual, and then the variance on the various funds, kind of in the format that you do your financial statements on. And it shows kind of by category, what those expenses were. In the budget to actual, then we just lump everything into 4 or 5 different accounts there, and this breaks it out by specific category there. Okay. Then if we go to pages 90 and 91, 92, 93, these are reports on, because you are a governmental entity. And then the one for 92 and 93 is our audit report on your federal money. And we'll take a look at that right now. If you go to page 94, this is the schedule of federal awards. And as you can see, your ARPA money is the one we estimated. It was 4,198,000. So that is the major program that we were testing when we did what we call the single audit on that federal money. And this also shows some of the other federal money you got, and where it came from, what department, and whether it was direct from the state or direct from the feds. Then the rest of those pages are kind of connected with, that's CFA. Is what we call it, that schedule of federal awards. Let's dive into the little one here. And it has pictures, so and graphs. I like that. So let's start off with current expense and just, if you notice what I'm graphing there is expenditures, revenues, ad valorem, tax, cash balance, and then the transfers. And so the cash balance is the green one, and if you look at that, then current expense is going up, then it comes down, and then it's going back up again. Good trend there. When we finish the audit, that's kind of, we look at some of these trends to make sure that you're not getting into some negative trends, because if your cash was continuing to go down, then, you know, that's a warning that, you know, you're maybe spending a little too much there or something, so
That's what the commissioners want to do.
they want to do that.
Yeah, they want to spend it.
Oh, but that's where they have you to keep it in.
Yeah,
No,
he's already talked about another election.
Oh,
Takes care of that whole green board.
so I think in 2022, wasn't that when we put a lot of money into road and bridge, like $18 million that we took out of the cash? I think that's when that occurred. I think that's why our cash balance dropped that year.
So I've got the
So-
$20 million is set aside.
hmm.
We spend those, but the good news here is it seems like when the blue line takes it away, the green line still keeps going up.
Yeah.
And that will give you
inside joke.
12-pack of Dr. Pepper, or 6-pack.
Inside.
Cause it.
24 case maybe.
There is a mark on there, and I don't know where it is. You know, our philosophy, the practice has been to keep 9 months, liquid operating reserves. And that's 9 months of A, B, C, and D budget, all four.
Not C,
Well, is it not C?
not capital.
Not
It's A,
Yeah.
and B.
Oh,
Capital outlay, yeah.
okay. Anyway, if you didn't do any capital unnecessary purchases, you go at least 9 months and probably a year without any revenue, still operating. Of course, by then we're cutting back on services and things of that.
Sure.
So that's why there's this much, and then anything above is what we start putting aside for these road projects. And so we can pay as we go.
But to me, this graph makes sense because our cash balance went down and then the next year our expenses went up because we made that transfer and a lot of the expenses came out of this
Cash
year.
balance went up too.
Well, yeah. But, anyway, that's because we didn't take it out. We continued to build it, but,
Yeah.
but the expenses are higher this year and I think that's a result of us increasing the cash balance.
Revenues are up too. So. That's where that's, what do we call that, E-Rock money?
All the expenses.
Excess revenue over budget.
Oh.
That's our actually.
Okay.
Not Robbie either.
Wait a minute here, am I missing something?
It's a very crude tool we use when we're getting to where we can compare at the end of a budget year, the actuals on revenue to what we projected on revenue. And usually we're so conservative, there's revenue over budget. So we call that E-Rod.
Oh, okay, all right.
Like the building over there.
Yeah.
Yeah.
So that's the, you know, the practice has been you only commit to ongoing expenses with ongoing revenue. That's an excess revenue over budget. But that's available. So you're gonna goes otherwise, it just goes into the fund balance.
Right.
Expenses.
You won't find that in your account.
No, that's why I was a little confused there. So.
But with that, I think we've really been able to utilize some money in some very worthwhile way. You know, that was just being non-utilized, you know, it's just money that was building and not helping the county. So I'm,
Like 3 years in a row with 5% pay raise.
yeah.
Because we have the flexibility, so you didn't tank the budget, you know, things like that.
I'm just really happy with what we've done there.
Yeah. Let's go to the road fund and look at those trends and the road fund is a recipient of those transfers, so you can see that blue line there, so.
You'll see that in a few years to come. Such a project.
Right. Mhm. Yeah, those construction projects just don't happen overnight, so. Let's go to the justice fund and, if you look at the green line, it's going up, the cash balances and, you know, that's a good thing too, so. District court. Cash is, you know, coming down a little bit, but probably that's because of, you've got a lot of,
We're only allowed to keep a 6%, according to the statute in our district court fund. And we were higher than that, and so we've had to bring it down.
oh,
We're
yeah,
trying to,
60.
60%, oh, what'd I say? 60, oh, 60%.
Okay,
Anyway, and so we've had to bring that down, so we budgeted differently, so we're trying to find where that balance is right now.
Sure.
We shifted to this. So,
sure, yeah,
60%
of the cash balance, we can only keep 60% of our overall expenses or something like that.
budgeted expenses or
Huh?
actual,
I think it's
so
budget,
an annual, so
Yeah.
one cycle.
but like we
So
had
60%
enough.
of what the budget
Where we
is.
try to put about 75% in our others.
Yeah.
Anyway, we were just looking at our numbers and we had that really high because a lot of our district court expenses were being taken out of the current expense. And so we made a shift into there. And I think that that's why our expenditures look high in the district court. Because it was a $2 million shift just in salaries and benefits. But yeah, but so we're gonna have to figure out where that balance is.
Couldn't remember if it was 60% of budgeted expenditures or something else.
I can't remember yet. I think it's budgeted, but it's not enough.
okay, let's go to the indigent. And this fund will eventually go away. Right now, you're just collecting some of the taxes and then probably paying some of the,
Indigent burials pretty much. And there are some, they will be versions paying yet.
well, but it's
So, so
for
that's,
this year, it's shifted to current expense.
did we do we never did the transfer then?
No, we have not done the transfer yet. We were just trying to expense it out.
Something you didn't take off my bucket list to get that moved.
Ron, that's your fault.
Well, and another 12 pack. Must Dr. Pepper.
Because when it's moved, it goes into current expense, it goes into these projects.
Right. Yeah. Let's go to the next one, Parks and Rec. And just look at those trends there and, the green line it went up in 21 and now coming down in 23, so. Next one is valuation. And, you know, things are pretty consistent, you know, from 21 on, you know, as far as the green line, the cash is happening there. Next one, sanitary landfill. As you can see, cell number 4, the expenditures are up on that, and that's because of the opening that cell number 4, so. And expenses there. And weed control. This one, the expenditures are more than the revenues, and you We bought capital equipment out of there, some equipment and vehicles. And that's why that's up so high. And justice building, fund building, pretty consistent because you haven't done much in there, just kind of keeping the cash in there at the 3 million. So, yeah, that.
I don't want to describe it.
What was that? Sorry.
We have to walk through that process.
Yeah.
Or Joe, you know, the sound a penny makes when you drop it.
Uh,
Cha-ching. But they've been very good expenditure.
Yes. Emergency communications, the green line's pretty flat there. 3B detention. Pretty consistent there too, so. Any questions or anything on that one? Or on any of them?
Sorry, I had to take that phone call, but I had just a simple question on page 48, the unclaimed properties of 218,000. Seems like I remember you claimed some of that when we first came into office a few.
Yeah, so we have to keep, a 20 or 25%, I have to look it up every time, balance of our, what is it, 20 to 25,000 or I can't, anyway, or a percentage, and we choose to keep the lesser because we've got the cash to cover our unclaimed. But we do transfers.
So there's 218 in there.
There will
That's
be.
some that we can pull.
Yeah,
in.
that'll be some that will transfer.
And you pull that into current expense.
Yeah,
Okay.
did you already?
So
do
that's
that?
gonna be,
We did, that's the
That's gonna
one
be on
where
the
we got a
whiteboard.
bug in the maintenance program,
Oh, that's right.
where we're waiting for them to get a fix in place. We'd have to do
Yeah.
each one individually.
yeah, it's perfect money for that.
And we
That's
won't,
pretty
don't want to
There's a
do
bug in our system. And so
hundreds of
we're waiting for them
transactions
to fix it.
individually, so we're just waiting for them to get the fix in place on the software so that we can do
Well, it will be,
it well,
Somebody-
it would be automated, but if we do it in the Munis system. And we do the grouping of them, it'll do it all at once instead of
150,000.
one at a time, at a time, at a time, at a time.
One time. You can't one
So
time
we're-
expense.
We're procrastinating
Alright.
until the software is fixed.
That answer your.
Yeah, that answers the question. How long does that take to build up?
Yeah.
Any, how long does that
It
take?
depends on how many sheriff sales and deeds and trusts that we sell. It seems like those are the numbers that make our unclaimed go up the fastest.
Cause it seems
like
like
they're
you
small.
pulled it out when I first came in 7 years ago.
Yeah, and we
So-
only had, what was it, 113,000, 118,000 in
Yeah.
there. That's when I said, really? We just have to leave that money sitting there forever? And that's
I
when I
remember
researched
you-
it. Um,
We got some more there. Did you do that?
Yeah.
We've also got more from the latest sales, you know, they haven't, that property that sold in Yukon. We have been in touch with the person, but they haven't come and claimed it, you know, so. Anyway,
They got 3D now.
forever.
Forever, yeah, I don't think there's any limit on it, but what we want to do is transfer to the unclaimed property. You know, and then it's the state's fault, right? I mean, what happens?
All that happens with the state is we report to them, but we are exempt from sending them the money. That's where this $218,000 is coming from, because we have to, if someone comes with unclaimed property for Bonneville County, we have to issue
Yeah.
a replacement. And so it's
We
how.
the whole amount.
Yeah, but they, I mean, they have to come, prove who they are, prove that the check was meant for them.
Okay.
But, and so when I have bigger sheriff sales and tax deed sales and stuff like that, money come in, I'll leave a higher balance in unclaimed knowing that you have a bigger liability.
Okay.
With,
Are you were saying something about you have the option to do 20% or
yeah, I
5,000?
can't remember what it
But
is,
something
yeah,
like
yeah,
that.
and we choose the lesser, 25,000 of the total or something like that. Because we know we can pay for it out of current expense.
Okay.
But yeah, so we keep it here, so we benefit rather than the.
But we just have to-
state.
Notify the state.
No, you notify us, we
Okay.
notify the state,
Okay,
okay? Chris, I take care of that.
yeah, and I probably will be doing that soon, because some of it, I mean, some of it, we know the person and could contact them, but some of the others just not been claimed.
Well, and we do it for timeframes, and I always send out an email saying I'm doing it for this time frame.
Okay.
This is what I need. It lags a year. That's what
And that's probably the one, when I asked for Shell, she said, we only had one and we've been contacting them, so we'll take care of it. So they didn't submit any this year because.
Okay. So when is that done about? Here?
The start date for the next, unclaimed property will be July 1, 2023 through June 30th, 2024.
That's where a lot of this fall in, so, yeah.
Okay.
We did only have one that's out there, and it's, you know,
Yeah, and then we have to report it to the state by the end of October.
Okay,
I must have missed a reading through there, but where were the exceptions?
the exceptions. Well.
There weren't. I five.
There's
Yeah.
plenty, they're just not listing them.
Yeah, we're,
No, that's about as clear on what we do that. Long.
yeah, you're not perfect, but.
Don't burst my bubbles.
Oh,
No, they're not. We're just lucky we have Thane doing so much work in Dana for us. Honestly, they,
And that's just our-
No,
as a firm, they do a lot of things that probably shouldn't be doing, but
But it's good to have that checklist or even check it off. That you think of those areas. Some of them were fairly
I don't know that right.
significant processes in the treasurer's office have been cleaned up. Or are continually cleaning up more. So.
Yeah.
Good thing.
yeah, and then if we'll, get you to at least once a year, those unrealized gains.
yeah, I'll have to address that. Because the reason I think Mark probably wasn't doing that is because the way that we do our reconciliations, we just go by the cash.
Right.
What we paid for it, we don't really even pay attention to that, but I can figure something out. I need to, I don't know, this wasn't written down anywhere, but we need to make sure that our actual investment accounts are reconciled. And those numbers, I think you sent me some over that there's some balances that are a little off. We got to get those figured out. So in order to, I don't have a process set up right now to monitor that. And when I do that, I'll also get something in place to take care of the market value adjustment. So
Yeah,
I'll work on that.
and it's just, unrealized gains or losses.
Yeah.
So, and you usually hold things to maturity anyway.
Right,
so-
right.
But it's just,
Still what we're supposed to do.
yeah, and Thane will agree with this, that sometimes the standards don't always, address everything. And we don't agree with it, but it's what we have to follow, so.
Yeah, we're gonna.
All right. Here's a letter from me or our firm to the commissioners. If we would have had problem with Ron or Tanya or Benny or anybody, not cooperating with us, we would have put it in this letter, and I'll just summarize, we did not. We enjoy working with your staff and with those in the county. They're helpful to help us get the audit complete, so thank you. We appreciate working with them. Especially Ron.
they're very patient. They're laying up blessings in heaven working with me.
I'm not picking on you today, but we wouldn't want to do this without you. I just want you to know.
You can't have wrong without wrong.
That's right.
Yeah.
Yeah. And then
It's true,
there's
unfortunately.
these, the
Yeah, I did see, yeah, we'll have the commissioners sign off on this.
on that, and then on that too, then,
That's your bill.
Oh, not on the journal.
yeah, that's.
Ron, have you reviewed the journal entries yet?
Well, that's the one that I talked with Thane once to see if the county could hire Thane away for a day to. Thane for a day? I was thinking probably a Zoom meeting because you'll probably need your computer, we'll need ours, but to go through those and
Yeah.
Sometimes I pay.
That includes.
Well, the
you know,
bad
that
part will be
stuff.
getting it
Yes.
through my head and sunk into my brain so that I understand what all of
And
those
thank you
things
for that.
are, where they came from, and
I think this would go to you.
yeah, it
Okay,
does.
you pass this over to-
Yeah.
The buck stops there.
I'm really excited about it. Tanya's learning all sorts of new things, so.
So we'll just get its signature on that one that you've seen it, and then we'll talk about it.
So whose signature do you leave?
Whose signature do you want on the, I would defer to Ron on this because he's the one that goes over the journal entries and responds to them. So you have to own up to this one.
Well,
No, I mean,
have-
somebody else can
yeah.
sign it, but that's like me signing. Ron, is it right? Should I sign it?
Yeah, and it's just, you're approving, we took your financial statements and then we, to get them, you know, to certain,
Standards.
I think I'm gonna change the one word though. It's gonna be, I've reviewed the above proposed journal entries and I am in ignorance of them. That's why the county needs to hire you away for a day so that we can go through it all. But
Don't tell him when anybody goes to prison, it's the person that signs their. this piece of paper.
oh, I don't think, you know,
Do we have a copy of that?
Like, they would like to put in some-
yes,
Give me one.
that's your.
Oh, that's my copy.
Or it's not signed.
Tomorrow's the 31.
Thank you.
Don, will you sign this one too? And then I'll get it in
okay,
a minute.
so.
That one's yours.
Oh.
So you're
oh,
the,
George.
chairman then, John.
Go ahead for fun.
Birthday.
Keep your day. All right, well, thank you. And any questions or anything before we leave?
Thank you.
Thanks.
Questions for you. You're doing much better this year.
Don't scare me nearly as much as the first
Well, we're
one.
past the end of the year. But for example, I've got the compensated absences already done. The budget
I can remember.
and budget amendments are put together. There was, but that was one, I was wondering how you want that presented, because you've got it the two different ways in there. One where it's, do you want me to break that down by fund into those different categories? Or do you want it line by line by line by line?
Eternal penny.
So let's just see here in the back of your financial statements on that page 70 through 90 or the is coming directly from units for
Mhm.
your budget, so that's, so yeah, it really is by line.
Because there was that one, and then there was the one further past it that was.
So the central committee.
Where was it?
Stand up items. One.
I don't remember where it was.
The budgets that's for the major funds at the bottom, on page 34, starting at 34. Those are not as detailed, because that's going by fund.
Maybe that's what I was thinking of there. So what I give to you, is it, you want it laid out like this?
That's where it starts.
Okay.
Yeah.
And then,
Then it
You-
consolidates all.
okay, so what you want from us then, because you had mentioned it on the last year and
It affects.
but so you want this from us and also
Like
this from
last
us
year,
then?
if I have the detail, it will automatically what the trial balance software.
It will throw it, okay.
That's what.
So if I give you this, that's what you want then, is this.
Liquidate it today.
Yeah.
Okay.
What would you?
I'm just trying to think how you do that. Yeah.
They were having Moss Adams do.
I'm just trying to think how, gosh,
You must do some things.
I mean, it kind of messes up with us, the cash value. Do we change that value? Is it changing value all the time?
Yeah, they've still got a lot of petrol baby stuff, you know, just once a year. Rather than do it, and then your life is probably, you know, check the basis for all year.
I don't think they.
But it's just, it's still important for,
Yes.
for a year, you know, so we're not.
Yes, it's still.
That, yeah, it would require kind of a change in the way that we've been